Hi, this is Collar of Sublime Trading, and this is your weekend Forex video analysis. So to start off the analysis, we're going to first look at the Australian dollar, US dollar. So we're going to look at the monthly time frame first. So straight away we can see that price is in this area of consolidation. So from this low to this high. So we need for price to actually break through this area of support. Also, price is below last year's low, so that's a good sign that we may see further weakness. But until we get a breakdown of this low, entering any short positions from here may see price come down to this area of support and bounce back to the upside. So let's look at the weekly time frame now. On the weekly, price is below the 50 and 200 simple moving averages. And on the daily time frame, price is below the 50 simple moving average and the 200 simple moving average, and as we can see, price is making lower lows and lower highs. So definitely seeing weakness in this currency pair, but as I mentioned before, I'll prefer to see that area of support on the monthly time frame broken before taking any trades, but shorter term traders may be taking pullback opportunities. As you can see, price pull back here, then move to the downside. Again, another pullback here, another one here, and another one here. Next, we are looking at the euro dollar. Looking at the monthly time frame, price is below last year's high and above last year's low. So preferably we would like to see price out of this area. So either above here to look for long opportunities or below here to look for shorting opportunities. But at the moment, price is showing weakness. So we may be able to see some short-term trades to the downside. Looking at the weekly time frame, price is currently below the 50 simple moving average, but above the 200 simple moving average. We would prefer price to be either above both of these moving averages or below both of these moving averages. As price is in between, we know to stand aside from taking any trades because the market will be unpredictable in this area. Looking at the daily time frame now, price is just below the 50 simple moving average. It was above it previously, and price is also below the 200 simple moving average. So in the daily time frame, price is below both of these moving averages, which is a good sign. But because we are in between last year's high and low on the monthly and in between the moving averages on the weekly time frame, I prefer to stand aside from taking any trades. The first sign of taking any short trades for me would be a break below this area of support. Next up, we are looking at the pound Canadian dollar. So again, with this currency pair, prices between the last year's high and above last year's low, but showing weakness at the moment after hitting this area of resistance. Looking at the weekly time frame, price is below the 50 simple moving average and also below the 200 simple moving average. So showing bearish bias. So that's a good sign that we can see weakness to the downside. But again, there are these areas of support in the way of price. Let's look at the daily time frame now. Daily time frame price is also below the 50 simple moving average and the 200 simple moving average. So because the weekly and daily are both showing a bearish bias, we can look for shorting opportunities, but we'll need to wait for at least this area of support to be broken before looking for any short opportunities. For longer term trades, we'll need this area of support to be broken as well. Looking at the pound US dollar, again, we're between last year's high and last year's low, but showing weakness at the moment. But this month, if I just zoom in, has been we've seen a bullish bar on this month, but not the strongest bullish bar because we have a longer wick above this candle. Going to the weekly time frame, price is below the 50 and 200 simple moving averages. Currently, price has pulled back. Now let's go to the daily time frame. Daily time frame price is above the 50 simple moving average but below the 200 simple moving average. So again, as I mentioned before, we need price to either be below both of these moving averages or above both of these moving averages. As price is within these moving averages, we need to stand aside until we see price break out either to the downside or to the upside above the moving averages. Ideally, for trend trading, I would prefer to at least wait for a break below this support and this support area here before looking for any shorting opportunities. The last forex pair we are looking at today is the New Zealand dollar, Canadian dollar. Now, this was previously between last year's high and last year's low, but currently is below last year's low now. So we're seeing weakness to the downside. Next area of support will be from this previous low area here. On the weekly time frame, prices below both the 50 and 200 simple moving averages, and on the daily time frame, price is below both the 50 and 200 simple moving averages. So again, we're looking for shorting opportunities, but there is a major area of support on the monthly time frame, which I showed you previously. If you are trend trading, if we go back to the monthly time frame, ideally we want to see price break this low, and then we can look for shorting opportunities, because we have all this clear space for price to actually move to the downside. Hope you enjoyed this Forex Weekend analysis. To catch all of my analysis for the weekend and during the week, don't forget to hit the subscribe button below.